Nintendo's calm after the storm. A tale of resilience. In the ever-evolving world of gaming, Nintendo has long been a beacon of creativity and innovation. However, even giants face turbulent times. Last week, Nintendo Commerce reported its fiscal Q1 earnings, which caused a significant drop in its stock value in the US markets the following day. Interestingly, this decline occurred despite the Japanese market being closed at the time. The primary concern? The earnings report and the broader macroeconomic fears, including the notorious yen carry trade. For a moment, investors were gripped by uncertainty, questioning the company's future. Yet, as the storm clouds gathered, Nintendo's true resilience began to shine through, and the stock started to recover. The question remained, what caused the initial drop? And more importantly, why isn't it as alarming as it first appeared? The earnings drop. Unpacking investor worries. When the earnings report was released, it was clear that almost all of Nintendo's financial numbers were down compared to the same quarter a year ago. The sharp declines in key metrics naturally raised red flags for investors, particularly those who may not have delved deep into the context behind the numbers. It's worth noting that a significant portion of individual domestic investors in Japan, many of whom are relatively new to the market, tend to react strongly to such movements without fully understanding the broader picture. This phenomenon is not unique to Japan, but is particularly pronounced in a market where individual investors have only recently begun to play a more prominent role. But, as the dust began to settle, a different narrative emerged, one that painted a far less grim picture. Why this drop isn't worrying, the earnings drop can be attributed to two key factors: tough year-over-year comparisons and the impending end of the Nintendo Switch's life cycle. Tough comparisons. The first quarter of the previous fiscal year was extraordinarily strong for Nintendo, thanks to the release of two major hits, the Mario movie and the new Zelda game. These releases didn't just boost earnings, they inflated them to levels that were almost impossible to replicate. The Mario movie, in particular, not only brought in direct revenue, but also spurred sales of both software and hardware, while the Zelda game shattered records, selling nearly 16 million copies in just 8 weeks. This year, without similar blockbuster releases, the first quarter was destined to be softer by comparison. Moreover, Nintendo is gearing up to launch new hardware, making it unlikely that they will release any major new games before the new system is announced. As the saying goes, software sells hardware, and Nintendo understands the importance of timing when it comes to exploiting their intellectual property. End of the Switch's life cycle. The Nintendo Switch is now entering its 8th year, a remarkable lifespan for any gaming console. As the system approaches the end of its life, it's natural for sales to decline. The company is in a transition period, with new hardware on the horizon, so a slowdown in sales is not only expected, but strategically managed. Beyond the numbers, a resilient performance. Despite the tough comparisons, Nintendo's performance was commendable. The company sold 2.1 million hardware units and 30.6 million software units during the quarter. While these numbers may not match the extraordinary figures from a year ago, they are still impressive, particularly considering the age of the Switch. Sequentially, hardware sales grew, and software sales saw only a modest decline. This indicates that, despite the absence of new blockbuster releases, Nintendo's core business remains strong. The company is effectively navigating the transition period, setting the stage for what could be another successful chapter in its storied history. The calm after the storm. In hindsight, the initial panic following Nintendo's earnings report seems misplaced. The company is not only weathering the storm, but also preparing for the future with its characteristic ingenuity. As the gaming world awaits the next big announcement from Nintendo, it's clear that this is just a calm before the next wave of innovation hits. A calm after the storm, where the company's resilience and strategic foresight continue to shine,